Hello and welcome to AQA Accounting. Today I'll be going through the topic of cash flow statements, in particular focusing on the question of Hickey Limited. If you want to access this question, you will probably want to search up on Google Accn3 June 15. It's the old spec of AQA. However, it is still relevant for the new spec of AQA 7127. So a good practice question worth going through for the A-level. So the first thing we're going to start off with is you should hopefully know what the format of cash flow is, and the first thing is profit from operations. Okay, so we're going to start off with workings 1, profit from operations. Okay, now in order to do this you need knowledge from limited company accounts and the statement of changes in equity. Now if you have a look on here, there is no profit from operations on here at all. Okay, and that's because you have retained earnings, which is where profits come into retained earnings. Okay, so the first thing that you probably want to do is, and with my students I've shown them, I would just do a very quick format of the IS. So you have profit from operations, and then you have your finance costs, so less finance costs. That then gives you profit before tax, minus tax, and profit after tax. Okay, now what we want with cash flow is we want this profit from operations. Okay, what you have here in retained earnings is what happens is once you've had your profit from operations and you take your finance costs away, that gives you profit before tax. You take your tax away, you have profit after tax. This then goes into retained earnings, which is over here. Okay, now retained earnings, for the statement of changes in equity, you have your balance BD, you have your profit, which is your after tax. As I mentioned, that comes into here, and then you have dividends that are paid out of retained earnings. Okay, so this is like a 2-column extract of the statement of changes in equity. So balance BD, profit, after tax, dividends, and then you have your balance carried down. Okay, so what we want is this. We don't have this. What we do have is retained earnings, opening, closing, 2014, 2015. So we're going to put the 2014 because that's the opening. That's going to come over here, 18,321. That's a negative, and then we ended up with 56,045 as a positive final balance. Okay, so we're taking information from here and we are completing the jigsaw. So we have opening, retained earnings, closing. We don't know what profit is, as in we don't know what profit after tax is, so we can work that out at the end, but we can work out dividends. Okay, now for dividends, it mentions in the question that you have ordinary share capital of, so you've got ordinary share capital of 131,250. Ordinary share capital. What we do know is point number 1 tells us shares are worth £1.75. Now if this is how much the total value of shares, if you divide that by £1.75, that will tell you, my calculator, which I can show you, 131,250 divided by 1.75, that will give you 75,000 shares. Now in the question, point 2, we are paying 10.5p per share, okay, times 0.105 times 0.105 equals 7875. So very simple. What we've done is we've taken the value of shares, we've divided it by the price per share. We have 75,000 quantity of shares, and we're issuing a dividend of 10 0.5 pence. So the value of dividends is 7875. And you know that dividends comes out of your retained earnings. Okay, so we have the balance BD, we've just taken it and popped it in. We have the carry down, we've taken it and moved it over there. Dividends is the first real calculation we've done. So if you put in your calculator this, we're working backwards to work out profit, this 56045 plus, working backwards, plus 7875 plus 18321. It gives you 82241. Now that is our profit after tax, which can come over here, 82241. Ignore that arrow there. Okay, that's profit after tax. Now if you're not sure about it, you might want to pause and just rewind and watch it again, okay, because now we are going to move on. Okay, now the next thing is tax. Okay, we need to work backwards to get profit from operations. Cash flow starts off with this. So the tax figure, now there are 4 tax figures in cash flow. There is number 1, the bank, what comes into cash flow, what we actually pay. There's your old liability, so balance BD liability, balance carried down liability, bank, and IS. Okay, now this is the IS. So if you look at the question, it will always mention a provision for tax, because that's what the tax is here. It's a provision for tax. Taxation on profit, profit for the year, IS, 12,600. Okay, so we're going to put 12,600 here. We're going to take it off because tax is a deduction. Then we want finance costs. Now, I can do that right now, profit before tax, because 82,241, we're working backwards, so we're going to add plus 12,600 is 94841. Okay, now the next thing is finance costs. If we get that, we get the final figure. Finance costs. In the question, we have the only type of finance that we have is debenture loans. That's relevant to this. Okay, debenture loans. Now for this is dividends, debentures. Debentures, we're going to do a timeline. What we know is year end is 2015, 05-15, and the start of the financial year is June, 06-14. 06-14 to 05-15. Okay, now at the start of the year, we had £125,000 in borrowing. Where am I getting my information from? Here, 150. Let me change that. 150. At the start of the year, 150. 2015, we ended up with 125. What happened? Look at the notes. It tells us, point number 5, a debenture loan was repaid in full. So we had some investors and it must have come to redemption. We had to pay the 25 grand back. So we started with 150. We've gone down to 125. Now, both of them have 8% interest. Now, this was repaid in March, which is sort of closer to this side of the timeline. So, 1st of March, 01, 03, 15. That's very simple. Timeline, start of the year, S, end of the year. 06-14 is the start, 05-15 is the end. 1st of March, we repaid the debenture. So, if you calculate in terms of months, March, April, May, 3 months, 125k. Here, you've got obviously 12 months, this is 3, this must be 9. You've got 150k. 9 months, 150k. 3 months, 125. Both 8%. Okay, and we are going to calculate the interest. So, if we do 150k times 0.08 divided by 12 times by 9, that's £9,000. Okay, 150 times by 0.08 times by 9/12 gives us 9,000. Have a go yourself. I'm going to do it now, so you might want to pause the video. 125 times 0.08 divided by 12 times by 3. Now that's giving 2499. It's 2.5. It's 2.5 grand. Just round it, 2.5. Okay, and if we combine the two, we have £11,500. Okay, that is your finance cost over here. 11,500. Subtract. Okay, so let me just check the figures. We're going to work back. 82,241 plus 12,600 minus 94,841. Sorry, I don't need to ignore that. Let's try again. 82,241 plus 12,600 gives us that. We're adding that on, 11,500, and we have 106,341. Okay, and that is the correct figure for profit from operations. So I'm going to do a very quick summary. I'm going to sum up in 30 seconds exactly what we've done, hopefully 30 seconds anyway. So the first thing is we drew up the IS format and the retained earnings section of statement of changes in equity. The first thing that we did was we took the opening and the closing. Opening, closing. That's step number one. Step number one. Step number two is you put the dividends in, and you can calculate that from ordinary shares and the nominal value and the dividend per share. Step number two. That's over here, step two. Okay, once we've done that, you have your profit figure. Step three is your profit, which goes in the format that we drew earlier. Taxation is given to us, number 4. Number 5 is you work backwards and fill out the subtotals. Step 6 was the finance costs, which is over here. And we knew that we knew that we have a timeline, and we have the start of the year and the end of the year. And at the start of the year, 150k, and at the end of the year, 125. Somewhere in between, we repaid a debenture. So we're paying 8% interest on 150, 8% interest on 125. 9 months, 3 months. Take the total interest, put it where it goes, and you end up with the profit from operations figure there. Okay, now that in the mark scheme is worth 5 marks. Okay, 5 marks there. Does take a lot of time to actually get it done. Okay, so that's part 1. That's the first figure for the cash flow statement. Okay, right, I'm going to turn over. That figure is ready to go in. There are some other figures. Finance costs, I believe, is another figure which is ready to go in, so I'm going to highlight that there. Okay, and also dividends is part of cash flow. So these are, it's taken a long time to do this, but these figures are now ready to go into other sections of cash flow. I'm just going to leave that there for a moment and flick over and work on my calculations and workings. What I would probably do is, there's multiple ways you can do this. I'm going to go through the key workings and then draft the statement. I'm not going to do everything straight away. I'm going to do some of the ones that take a long time. So that's profit from operations. The next thing I'm going to talk you through is depreciation. Now the way I look at depreciation is, I look at 2014 going on to 2015. I know at the start of the year I had 251,900 worth of assets, net book value. I know at the end of the year I had 347,500. Now naturally net book value goes down. Naturally assets go down. Why has it gone up? So I would look at this and I would say to myself, have we bought anything? Have we sold anything? Have we revalued? So P, purchase, S, sold, are revalued. Have we bought anything? Yes, we have. 1, 2, 3, 6, 4, 5. Okay. Have we sold anything? A non-current asset with a net book value of 25 was sold. 25,470. Add, subtract. Have we had any revaluations? Part of your fixed asset schedule topic, which you should have covered before doing this. Revaluation reserve. It went from 19,700, revaluation went from 19,700 to 49,625, which is an increase of 49,625 minus 19,700, 29,925. Okay, so that is going to be an increase 29,925. So according to my calculation, this is how I would look at it. If we have 25,900, we bought something, 1, 2, 3, 6, 4, 5. We sold something, we're going to take it off. And we had a revaluation which we're going to add. That equals £380,000. However, it doesn't make sense. We ended up with 347,500. What's caused the difference? Depreciation. If you do the difference between the two, then you have a difference of 380 minus 347,500 minus 347,500, 32,500. This has gone down in value. 32,500 is part of your answer for cash flow. 32,500 depreciation. Okay, that's another high value mark. That's worth 4 marks according to the mark scheme. Okay. The next one I'm going to focus on is taxation. Okay, now for taxation, you need to, for the purpose of AQA, know the format of the taxation T account. Okay, and you need to know that there is tax is a liability, so you have a balance brought down on the credit side because it's a liability. And if you look at 2014, you have a liability of 14,200. You will also have, this is obviously taxation liabilities will carry forward. So you have 14,200 at the start of the year. At the end of the year, balance carried down, you have a liability at the start and at the end, 15,100. Okay. We also know that something was sent to the IS. Look over here. IS 12,600. Well, how did it get there? You transferred it from here. 12,600 goes out of tax into the income statement. And we know that there should be a payment to HMRC. This is your question mark. 1, 2, 3. Balance off the account. Feel free to pause and have a go. So 14,200 plus 12,600 minus 26,800 minus 15,100, 11,700. Carried down, brought down. Standard rules of double entry. You should know this. Okay, this is for cash flow. This is the taxation amount. Remember, cash flow is a change in cash. Where is your money coming from? Where is it moving to? Well, 11,700 is a payment towards our tax liability. So just remember, there is a liability at the start, a liability at the end. IS will have a provision for tax, and the difference between this balancing of the account is what you pay for cash flow. Okay, again, this taxation is worth 2 marks. It's not a huge number of marks, but it is part of cash flow. So far, we've done all the main calculations, the heavy work. Now we can move on to the light work. Okay, so I'm just going to move this over down here, and I will refer to it in a moment. So we're going to start the question. Okay, I don't know how long we've spent, maybe around 10-15 minutes doing the workings, but we need to get started and hopefully we can whiz through this. Okay, now I'm going to abbreviate only because of time. You should take the time to not take any shortcuts. I guess perhaps us setting as a good example for you. I'm not going to take any shortcuts. So let's do it properly. Hickey Ltd. Okay, statement of cash flows for the year ended, apologies if you can't read my writing, 31st May 2014. So remember, a title has the type of statement for the year ended or as at the year and the name of the company. So 1, name of the company, statement type. 2, that's my sensor going off, for the year ended or as at. 3, and the date. 4 things that make up a title. Profit from operations. Okay, this we worked out, just going to show you that one there, 106,341. Okay, the next thing we're going to put is depreciation, 32,500. Remember, depreciation, you have to reverse. It's a non-cash transaction. It comes off profit, so we add it back. Okay, then we're going to do loss on disposal. Now this one, there is no workings for it, but if you have a look, it says here that we made a loss on an asset. Again, it's a non-cash transaction, as in the loss. You don't money doesn't go out the bank if you lose money, and money doesn't come into the bank if you make a profit. It's a transaction we have to reverse. If you make a loss, you add it back, and if it's a profit, you take it off. Okay, so profit from operations, depreciation, disposal. Next is inventory. We are working on the section of operating activities. Now inventory, if you look at inventory went up from 50 to 69. It went up. Inventory increased. Now if inventory increases, then basically cash goes down. The way I think of it is inventory goes down, you're selling, cash comes in. Inventory goes up, you've bought more, you have less cash. Okay, and you do the difference between the two, which is 19, 120. So we have less cash. The more we buy, inventory has gone up, increase. We have less cash. Okay, trade receivables. Right, trade receivables, if we have a look at the information, it tells us we went from 52 down to 37. Okay, that basically tells us that we have a decrease in trade receivables. Okay, and that basically means the balance has gone down, customers are paying us. Okay, which means we have an increase in cash, and the difference between those two is 14,340. Okay, so if trade receivables goes down, customers are paying us, cash is coming in. Okay, and if inventory goes up, we are buying more, cash is going down. Trade payables, have a go. Feel free to pause and have a go. So trade payables is going up. Now the way I think of this is if payables goes down, why is it going down? Because we are paying our suppliers, so cash goes down. If payables go down, cash goes down. If payables goes up, then cash goes up. Okay, so the difference between this is 13,384. Okay. If inventory goes up, cash goes down. If trade receivables goes, what did we say? TR goes down, cash goes up. And if trade payables go up, cash goes up. Okay, I'm just going to take a pause, quick 20 seconds for you to catch up. Okay, we're going to be moving on now. So, okay, right. Then we have cash from operations, which is a subtotal. And if you add, minus, add, there's one to deduct. You should have a total of 152. 539. Okay, that's cash from operations. That's a subtotal. Okay. Thereafter, you have two things. You have interest and you have tax. Okay, interest we worked out. If I show you over here, 11.5. That is obviously a cost. Cash is going out, and taxation, which I showed you earlier, is 11.7. These are both deductions. Okay. If you subtract those two, you will have 129,339. Check your figures yourself. That is the net cash from operating activities. Okay. So that is your operating activities section. The next section is the investing activities section, which we're going to move on to now. So cash flow from investing activities. Okay. Now, in the investing activities section, typically there are two things. If you buy assets or if you sell assets. We bought an asset, purchase of non-current assets. We bought an asset which was over here, 123,645. This is going to be a decrease in cash, money's going out. And then we sold an asset, sale of non-current assets. Okay, it mentions here that it had a net book value of that and we made a loss. So if you just add on to your workings, sale of NCA, if it was worth 25,470 and you made a loss of 5,094, you sold it for 20,376. This is the selling price, SP. It was worth 25. We lost money. We sold it for less. 20,376 is the money that's coming in. So we are going to add. Okay, we are going to add. The subtotal for those two is 103,269. Subtotal. Okay, overall it's a negative. So we can use that and work. Okay. The next section is the financing activities. Cash flow from financing activities. Okay, this is all to do with financing, typically loans and dividends and debentures, maybe even mortgages as well. Okay, now in the question they told us under point number 5, a debenture loan was repaid, so we can say repayment of debenture, and we paid back 25k, so 25 is going out of cash. Okay, we also know that dividends were paid, and that was on our workings over here, 7875. 7875. Okay, subtotal for that is 32,875 negative. Okay, which means the final section, the reconciliation, overall 129,339 minus 103,269 minus 32,875. Overall, we have a decrease in cash. Cash has come down by 6,805. Decrease in cash. Okay, this is a net decrease in cash, 6,805. We made all that money, and sorry, that was the change in cash from operating activities. We spent money on investment and financing. Overall, we have negative cash change. Okay, then you have cash at the start of the year, so cash and cash equivalents at the start of the year, and cash equivalents at the end of the year. Cash at the start of the year, you've got to look at the FP. We have, at the start of the year, we had 3940. At the end of the year, have a look at this year, 3940 at the start. At the end, we never had anything. We had an overdraft, 2865. So check it. If we started with 3940 and cash has gone down, minus 6805, 3940. Okay, 3940 minus 6805 equals 2865 negative, because it is a negative, because it's an overdraft over there. So that works. Okay, that works. So I've done a summary of the first section. Obviously, profit from operations, depreciation I've been through. I've been through interest over here. I've been through the taxation with you. I've also been through dividends paid and how to work that out. Debentures, straightforward. Look at the figures, put the change in. We bought the asset, well, that's given to us, nice and easy. We sold it. I showed you the workings on how to look at if it's worth 25 and you made a loss, you sold it for less. Okay. We've also looked at trade payables and receivables and inventory. These are the easy ones. Do the differences between them. And we've also been through the loss on disposal, which, well, was given to us over there. So hopefully you've got a better understanding of how to do this. You've got subtotal, subtotal, subtotal. This is your overall plus, 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 minus, minus, minus. Change in cash, decrease or increase. These two figures will be given to you. They may not be given to you. You might have 1 and 2 and you have to work that out. Okay, sometimes they give it to you, sometimes they don't. But if they do give you these two, if you work that out, you can check if it reconciles yourself. Most of the time, if it all works out, you're on the right lines. Okay, so I hope that's been helpful for you. Do subscribe as well. Hopefully, I'll have some more time to upload some more questions and videos, etc. for you. So do keep an eye out for that. I hope it's been beneficial for you. Thank you for watching. Take care and all the best.